Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on SPY IWM and QQQ. So a gap down open today. The bulls bought the dip, very low volume. We have not filled the gap yet by 6 cents. 236.95 will fill that gap. Has not happened yet. Lower highs and lower lows continuing, but there's no red flags at this point for the bulls. If we see that gap fill and we start to take out these higher lows, I'm looking at 236.01 and 235.41. If we break those levels, then we see more than normal healthy short-term consolidation. We are not seeing any red flags on volume or price action yet at this point. We're keeping an eye out for it, but certainly no signals that this is anything other than normal healthy consolidation currently going on. We do have that upper wick on the weekly time frame for the first time in 5 weeks to be keeping an eye on. That shows profit taking, but again, no confirmation right now. It would require a loss of some of those support levels I just highlighted in order to see a red week here confirming the potential bearish reversal inverted hammer with that upper wick. And it doesn't even fit the definition of the inverted hammer, but the psychology behind that upper wick definitely does show profit taking. IWM with a lot more weakness. And just a comparison here, look at the low of today for IWM. We hit down and we hit the price of February 9th. If SPY were that weak and we hit the price of February 9th, we'd be at 231 right now. So we are currently over $6 higher on SPY than where we currently are on IWM in terms of previous price action. So we lost the middle Bollinger Band support. The bulls did buy the dip. This is a bullish candlestick, and a green day would confirm it tomorrow. But if we are seeing weakness in SPY, it almost makes sense to just go right on over to IWM and play IWM bearish rather than SPY, because the downside has been giving nicer gains. So it is a bullish reversal candlestick. Resistance is 137.97, and the middle Bollinger Band on the daily is 138.32. Bulls need to see follow through in terms of turning this around on the weekly time frame. Still normal, healthy consolidation considering where we are coming from. The support level here on IWM is very, very clear. 133.12 is the must-hold level, and it was a little bit of a double low. We had 133.12, 133.17, 133.24. So holding those levels, and the middle Bollinger Band is protecting that support. So if we do consolidate and we bounce off the middle Bollinger Band, it will be a higher low compared to those low 133 levels. So checking in on SPY, the same price is down in the mid-220s. So lots of wiggle room in terms of keeping the long-term weekly uptrend. We're more concerned with the daily uptrend. Is this consolidation normal and healthy? And again, right now, all signs point to it being so. QQQ, same healthy consolidation, lower highs and lower lows, but the bulls buying the dip again. Resistance is 130.95, 131.06, and the recent high of 131.68. So the bears seeing a little bit of downside. We have filled the gap to the downside, and we're now looking for the bulls to form a higher low compared to 129.38. No red flags for volume. We've got the middle Bollinger Band support catching up to that 129.38 level. And on the weekly time frame, little bit of an upper wick of profit taking similar to SPY, and we're not seeing any downside so far on this week compared to the weekly time frames. Higher lows on the weekly time frame for QQQ has now been in play for the past 9 weeks. So if we lose that higher low pattern and break 129.66, then that would be a red flag. But again, we're a ways away from that happening. So need to be cautious. Personally, I would not be in bullish nor bearish positions overnight right now, because the bears are clearly in control the past couple of days, but the bulls are clearly in control longer term. So we could see further weakness and a lower open again tomorrow. That has been the pattern. We've seen lower opens now a couple times in a row on the S&P 500. And after we fill that gap, We'll be watching to see if the bulls show back up and resume the overall uptrend. Keeping in mind, we have the FOMC meeting a week from Wednesday, certainly going to be on the mind of the bulls and the bears. So I appreciate you watching. Tomorrow should be pretty telling in terms of whether or not we fill that gap, whether we see a break of the lower high, lower low pattern over the past 3 days. Tomorrow I am looking for a bit more direction and conviction either by the bears or the bulls. So watching this indecision, and we're seeing some downside here after hours. We'll see if the bulls recover by the time we open tomorrow. Thanks for tuning in. We'll check back in tomorrow. See you then.